All right, let's do a portfolio review for the second quarter of 2024. What's been going on? Lots and lots of volatility. We will look at the stocks that are in my portfolio, and I will talk a bit about how I view the market going forward. So remember in Q4 of 2023, I said, all right, these stocks are going to take me from 1.8 to 2 million in the year of 2024. Well, with the growth stocks, the high risk investments that I hold in my portfolio, we see a lot of volatility. It can go extremely quick. And in Q1, super fast, went up to 2.5 million just on this little Swedish brokerage account here. And now in Q2, well, it's come down to 2 million again. And as you can see here, for this graph shows volatility during the year. So just for the year of 2024, the months we've had so far, and already you can see just huge volatility coming from holding growth stocks. And this is something I can do because I'm young, I have far away until retirement, and it doesn't matter to me if it goes up and down a lot in the short term. What I look at is expected returns being higher over a longer horizon, which tends to be the case for small cap stocks if you make a proper selection in a good business. These small cap stocks, same with, I see a lot of popularity around Hims and Hers right now, one of those small cap stocks doing tremendously. You're going to see a lot of volatility, and it's the same for the stocks that I have selected in my portfolio. So now we're down to slightly above 2 million again here in the Swedish brokerage account. Let's take a look at the stocks that I have, and I made a nice list here for you guys to be able to see what type of assets, the stocks that I put in my portfolio, like the average buy price that I have on those, and then the return as well, and how large a part it is of my portfolio. You can see Porch Group being my biggest bet here, just slightly above 50% of total portfolio size. Definitely very, very risky. Definitely not a lot of diversification, but I do take high risk, and it has paid off with great returns so far. Although for the more paper-handed people, it can be very difficult to sleep, I assume, when you see the type of volatility that you just saw in slide number 1. Imagine being up 500,000 and then down 500,000, and on big days the portfolio can easily swing a couple of hundred of thousands, and that can be very, very difficult for a lot of people. I understand that. And as I get older, I will diversify away from small cap growth stocks to more stable stocks, such as the one here on the bottom, Movie. Very stable stock, a nice one to park millions in and collect a dividend, but definitely not one that's gonna generate a lot of wealth very quickly. Speaking of Porch Group, Q2 here, I assume it's going to be a slow quarter. I don't expect a lot of movement in the stock price. And then in the second half of the year, I think that there are great chances for a beat in terms of profitability, given how management raised guidance in the last quarterly earnings report, up with 1 million. And in terms of the profitability targets in that case, and I think that it's a good opportunity for a beat. I think that the price to sales is quite nice as well. And we see a very small cap stock having a lot of revenue, and the revenue growth is there, and we're seeing profitability more and more profitable. And I think that guidance of being profitable on a full year basis in terms of GAAP measurements for 2024 is very reasonable. I think that the track record of management as of recently in terms of what they actually perform in the profitability segments has been, outstanding. They haven't done a huge miss or anything, and they've been beating a few quarters in a row there. So definitely a nice track record, and that gives me a lot of faith to be able to continue to hold the stock and continue to diamond hand it. I don't see any reason to sell with those types of numbers. Then we're seeing Palantir as the second largest holding in the portfolio. This is one that I bought as a result of having worked in the tech sector for a long time. It's quite important to understand what type of business we are in this case. And in terms of software, it's a lot down to the product, having a good product, having a team that develops it, that makes sure that everything's running smoothly, that it's not outsourced, it's in-house, there's a great market fit for it, and it just works. It's a lot less just sales and marketing like we see in fast-moving consumer goods, like we see in a lot of other sectors. It's more focus on product in this case. And when I worked at Dell, when I spoke to IT managers everywhere, I really understood the IT environments that large companies face today, how fragmented it is and how difficult it is to get down proper communications, even with having ERP systems in place and all of this kind of stuff. So there's just a fantastic market fit for a solution like Palantir's. And we've seen growth. We don't see churn, which is a good sign, but the growth is a bit slower than I would like, up about 50% on it. I don't see a reason to sell yet, although I'm slightly worried about the slow growth and as well the dilution here. However, there's some great triggers short term. They've had profitability here quite a few quarters in a row, so it's likely that they will be included in the S&P 500. They're meeting the criteria. We saw it took a long time for Tesla to be included, but with an inclusion, well, then index funds are going to be forced to buy this stock, and the demand alone will drive prices higher. Then we have StoneCo. I've done a video on them recently, the payment processing solution in Brazil. Terrible floods in Rio Grande do Sul. My heart goes out and condolences to the people of Brazil in that case. This investment, I think, is risky indeed, like all of them that you're seeing. However, I think that it's a bit better bet on the emerging markets than, for example, Nubank that I looked at. It's very easy to give out credit. And one of the reasons that StoneCo dropped so heavily in the past, if you look at share price, when I started to buy in, they were like in a deep, deep hole, is that they gave out a lot of credit. And this credit operation caused big issues. They've been able to recover from this now, but it was a huge issue. And credit in Brazil, they're giving it out for a t-shirt basically that costs $5. You can buy it in installments of 3, and everybody wants to have credit to get new shoes or new like small purchases. So, and there's not necessarily a culture of paying back. This is creating a lot of issues in Brazil with the credit cards and the high rates that they have to pay from the different banks. In that case, indeed, Nubank is doing better than Banco do Brasil and the competitors. They're having a lower rate, so they will attract new customers. But I think just betting on taking a cake out of the transactions that we see every day is a bit safer route to go. That also will benefit from the growth of the Brazilian economy and from the digitalization, most importantly. Moving away from just using cash to using more cards, using more credit cards, all these types of solutions. And we indeed see them everywhere in Brazil, so quite a good sign. I'm still bullish on this stock. Then we have Bauch & Health companies, not a growth play, more of an asset play. I need to do a video on this stock really soon. I will make sure to look at it closer in the weekend. This is one that's backed by Carl Icahn. He invested a lot in it. Let's see if he can divest away the Bauch and Lomb company. It would be nice to get shares in that as a shareholder of BHC here, because the valuation doesn't really make sense in this case. But with the high debt load here, this company has been hurting with the higher interest rates, and it's less likely as well that we're going to see a spin-off of the skincare division of these units in this type of environment that we're seeing right now. And indeed, I looked at YouTube shortly today to see some news regarding this, just from CNBC. And I saw 2 years ago they were still talking about the spin-off in this case. So it's been a long time in the making. However, sometime the chickens are going to come home to roost, and it will be a spin-off. It will be divest the shares, so give them out to shareholders. And that's going to unlock a lot of value in this case. Also, a lot less volatility than the other growth stocks, but down almost 20% on this one. Then we have Vitrolife. This is a stock I like. This is a stock that aligns with a global macro trend, and this is one of those companies that I'm considering increasing in as well. I think that there's a lot of potential here for Vitrolife. There's a lot of growth potential as millennials are getting older, and we're seeing the effect of the choices that a lot of career women make today. And a company such as Vitrolife has the full suite to be able to help with the issue that arises with trying to get children at a older age. It can be very difficult for a lot of women, and Vitrolife is able to help with this. It's able to provide comfort, able to help freeze eggs, do the DNA planning, do the different components that are needed in fertility clinics. Swedish company, very high standard, not diluting shares, small dividend, fantastic growth. Definitely a favorite of mine. Definitely one that I need to increase my holding in. Then we have Foot Locker. Some good dividend here. They took on a lot of debt to grow the amount of stores, and that has come back to punish them a bit. We're seeing SBB here as well. This is another one I need to increase the amount of shares I have in. SBB is too big to fail, in my opinion. I don't think that we will see them in bankruptcy court in Sweden, and there's also talk of reinstating dividend and paying out the dividend of 2023. So quite the high yield on this one. This stock has been severely punished. It has been oversold, in my opinion. The housing sector is really hurting, but with the higher interest rates, that just makes sense. And there's a lot of risk in property companies. In the case of SBB, I looked at the balance sheet, and in terms of debt to equity ratio, it was in line with averages. However, we also need to worry about the maturity of debt in this case, when it's coming to maturity, when it's in need of refinancing, and how those higher yields will affect the results, the performance of the company. But indeed, making money from operations and then the financing part is not doing too hot in terms of analyzing the cash flow on the company. Up slightly on this stock. I definitely need to increase my holdings in SBB and in Vitrolife. And I plan to sell off one of my assets to do so. I will sell this lovely watch right here. It's a Rolex Datejust 41. I don't need it anymore. I don't think it represents success the way I thought when I was younger and was able to buy it with my first bonus. And I can't really bring it with me when I travel to Brazil and other dangerous places. It will just put my health at risk. So I will just be able to sell that luxury good and buy more stocks instead. Then we have Medical Properties Trust. This is a company I liked before the drop. They were at a price that I thought was reasonable. But as you can see in the growth portfolio here, it dropped by 20%, and I really piled in on this stock in the dividend portfolio that I'm starting to build on another account, on another brokerage account. So I bought a ton of shares at $3 something. I've continued to buy this stock at just above 4, and the most expensive I bought it at was 4.6 or 7, something like that. I need to buy 2,000 more shares in Medical Properties Trust, and I will be at 10,000 shares, and then I will stop there. It will be a little bit more. It's a couple of shares here as well, indeed. Then we have Africa Oil. This stock performed extremely well when oil prices were rising, but focus has shifted away from the energy sector now, and we're not seeing the huge potential that we once saw in that segment when the Ukraine and the Putin war conflict was escalating, and prices had a response to that indeed. So this is one that I'm still looking at, but I will not increase more in that one now. I like to hold it since they have been doing some exploration on some blocks off the African coast, and they've seen some amazing preliminary results. I think that there's a lot of potential in this stock. I don't know how expensive it will be to put up an oil rig and start drill, but there is a potential for a huge oil reserve in this case for Africa Oil. So I will definitely keep my eye on this. I need to make another video on this one as well. I need to do an update on BHC, and I need to make an update on Africa Oil. Then we have a German software company that had terrific growth. This one I need to do a video on as well and talk a bit more about. And then of course Movie. I've recently done a video on that one already. So that's the bulk of the portfolio right now, the growth portfolio. I look at this and I see that I will increase in SBB and I will increase in Vitrolife. These stocks are both traded in Swedish krona. Swedish krona has performed terribly against larger currencies. It's been losing a lot, and just having stocks in dollar has been able to up the value of my portfolio by a lot, so I'm grateful for that. However, in good times, small currencies tend to increase in value, and I'm heavily exposed to the dollar right now, heavily exposed to euros as well, getting the salary in euro. So I will definitely diversify a bit and take on some more currency risk by adding more of Swedish krona to the portfolio in this case. Also, regarding the macroeconomic environment going forward, I've looked at it in the past and I was pretty sure that we were going to see interest rate cuts by this time around. However, this has not come to fruition, and higher risk assets such as small cap growth stocks have been punished for this. We're seeing a flight into the Magnificent Seven. We're seeing the likes of Alphabet, Meta, Nvidia, the large companies driving up indexes, with capital seeking shelter just flocking to these large companies and being parked in there. And in terms of the rate cuts, well, then we're gonna see more volatility from smaller cap companies when such an action occurs. Right now, we're seeing communication that, all right, if we see a soft landing, then maybe we can see this at the end of 2024. A lot of smart people did not see that one coming, and that's put a bit of a damper on some assets. But I think in terms of expected returns, I think that the small cap segment has underperformed for quite a bit now, and it's likely that we will see a reversion to the mean towards expected returns in this case, since the historical performance tends to line up over time. Although, as always, past performance is not a guarantee for future results, but doing basic analysis on it, looking at expected returns, it tends to hold true over longer periods of time. That's just some comments on the portfolio, some comments on the performance, some comments on the macro as well. And it will be very interesting going into Q3 and Q4 indeed for Porch Group here. That's historically a good timeline for it. I will not add more stocks to it since I'm already very heavily exposed to it, and it's more beneficial for me to build a position in another company that has potential to generate huge returns just to diversify slightly. I think that 7 stocks being equally divided into is a good amount. If I continue to buy a lot of stocks and just add them, well, then I will just be an index fund. And that's not the point of this growth portfolio. The point is to seek above market returns. The point is to just try to find good companies and hold on to them. If I wanted to buy more indexes and diversify more, well, then I would just increase the contribution to the pension account that I have that's already investing automatically in indexes, already doing that up to the maximum tax-free limit, of course. That's what you're not seeing in a video like this. It's super important part of personal finances to max out contributions and tax benefit part for those who live in countries that operate in such a system. And if you don't, and you're looking to do savings, well, index funds is a super important part. I do 15% of my paycheck every month into index funds, but it's not making a good video to talk about that type of investing style. It's more fun to look at individual assets, individual stocks, talk about them, and seek that above market returns to be able to make money quicker. Anyways, that's been it, commenting a bit on the portfolio here in the second quarter of the year, the performance, and as always, I hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.